Confederation of Zimbabwe Retailers says it has engaged government to find ways to saving the sector, which they say is on the verge. Our business correspondent Melissa Chatikobo explores some of the challenges that are being faced by the sector.
In April 2024, a 10 kg bag of millimil cost 100 ZiG, while cooking oil was 55 ZiG in former retail shops. 5 months down the line, the same products now cost 154 ZiG and 98 ZiG respectively. This signals a 63% increase. It has been the case with prices of most basic commodities in Zimbabwe's former retail shops, and consumers are hit the hardest.
Vanhu vachiona kuti rakushanda vakatanga kuridzikisa vachirikwidza zvokuti parave izvezvi takutoshauza kuti toita sei naro.
Dai rate yangodzokera pa14 payanga iri nekuti vanhu vatotanga kutoikwidza saka tizositi kumberi ticharamba tiri pa20 here kana kuti ticharamba ichingokwira semakwiriro arikuita pondi.
The consumer basket, which was packed at about 3,000 ZiG in April, has almost doubled as pressure continues on the local unit. Some shops have even hiked prices in US dollar terms. Retailers have justified the price increases. They say an unstable exchange rate on the black market, coupled with foreign currency shortages on the formal market, has forced them to pass costs onto consumers.
Our current pricing model is just based on survival. We are not even profiteering at this moment. But our call to government currently is to liberalize the exchange rate. We are asking government to allow us to use an exchange rate that is market determined. And this is something that we are currently discussing with government.
A surge in prices in retail shops has led people to shop in tuck shops, which sell exclusively in foreign currency. Consumers are aware that they may be sold expired or underweight products in these unregulated shops, but their buying power or lack thereof causes them to do this.
Hatikwanise kuenda kunana Pick n Pay because my prices are anenge ari high, saka handikwanise kuafford kutenga ikoko, ndo that's why ndichuya kunoko.
Marate anochajiwa kunoko anenge ari right because they are always charging USD.
As a response to the growing demand of the hard currency, the Reserve Bank of Zimbabwe injected $64 million into the foreign exchange market. Retailers say this may just be the tonic to their challenges, but observers have another view.
In the short term, it's not going to be easy. For us, we are looking at production, because as long as we depend on importation, the foreign currency is not going to be enough.
Retailers believe the solution lies in supply chain discipline, consistent regularization of the formal and informal sector, liberalization of the exchange rate, and selling fuel in local currency. These are some of the measures they have tabled before government.
They are aware of the challenges that we are currently facing, and we are actually working with government closely at this volatile time within our sector.
The landscape of HRS CBD is changing, with formal retailers closing to make way for tuck shops. Formal traders say they are on the verge. With the dialogue going on between government and formal retailers, consumers who seem to bear the brunt hope for a lasting solution. Reporting for ZTM Prime, I'm Melissa Chatikobo in Harare.
Our correspondent Eben Mabunda crunches the figures to give a bit more understanding of trends on both the formal and informal markets regarding the ZiG and prices of goods.
Well, good evening. We have seen significant price increases over the past 2-3 weeks, which are very much concerning. But for a broader perspective, let's take a look at some of the relevant statistics in this particular regard. Starting, of course, with the inflation statistics, which in May were in the negative at minus 2.4%, went up to 0 in the succeeding month and went back into negative territory before hitting positive territory in the month of August at 1.4%. That's of course in ZiG terms. We are using month-on-month inflation stats here because you'd need at least a period of a year before the yearly inflation aggregates can be tabulated. Now, if we are to move on to the US dollar statistics, they would tell a similar story where August is concerned, where it is that the yearly inflation came in at 3.7%. You juxtapose that to how inflation fared at the start of the year, where again it was in the the negative territory at -2.9. But of importance would be how it fared since the new currency came in April, coming in at 3.2%. Again, now to move on to the month-on-month inflation, where we started off in May at 0.1% negative territory till August, of a figure there of 0.2%. We do not as yet have the September inflation statistics, but we are expecting them in the next 2 days. But of course, it is imperative to note that those statistics will be very much higher than the August aggregate of 0.2%. And here is why. If you look at the forex movement between the parallel market rate and the official market rate, which of course would be the interbank, there in the blue, of course, would be the former market rate, which is pretty much fared between the territory of the 13 into the 14 against the US dollar. But of note is the parallel market premiums, which initially were very much in the narrow at between 10 and 20%, but have since widened, coming from 14 when the currency was launched, a good 16 in at the close of April. Of note was how it went up to 20 in the month of June and was sustained in that territory for several months on end, jumping up to 22 at the close of the month of July. And now we are looking at anywhere between 26 and 30 against the US dollar, the greenback, of course, in that particular regard. But what we're seeing here is that widening gap is very much of a concern, especially when you look at the value of the transactions in the economy. An important aggregate, 40% of the transactions that are taking place in Zimbabwe at the moment are taking place in the domestic currency, against 60% in the greenback. Why is that important? It would be critical to bring into perspective the fact that especially from a retailer's perspective, most of their costs are denominated in US dollars.
Konapo ipapo ba ZTN Prime, DSTV channel 294, the place to be.